morning everybody, it's Christian from Serene Education with the All Majors Analysis Update for the 28th of November 2011. Okay, let's have a look at the Euro against US dollar. Daily opened slightly higher than the close. Nice little bounce at the upside last night at the Asian Open after the ECB mentioned that it might be bailing out Euro or helping Italy. It's been more precise with this little bailout. An equivalent to roughly around about 400 to 500 billion euros, and that piece of news came out and we saw the euro against US dollar open higher, and what it's doing at the moment now is pretty much going sideways since the open, failing to break above the 13,3500 mark. Oops, apologies. Yeah, roughly around the 13,3500 mark and consolidating above that area there. And if you go into smaller time frames, price is finding a support at roughly the 1320, 2850, thereabouts. You can see quite clearly after the bounce higher, it's just been sitting and going sideways all evening. So, sorry, 1333.30, thereabouts. You can see quite clearly there we have had price support, and what I'm going to do is going to make it nice and thick. So intraday, guys, we want to see a break above that in order to see any attempt at the previous consolidation range, roughly around the 13,3800, which will bring us back to the institution moving average, and that'll give us at least 30 pips. Quite nice upside movement, but as we stand now, we're just going sideways. CTC on our 30-minute time frame is pretty much negative. We are still in a negative range because we're still below the institution moving average in particular, and we need to be breaking at least trading above that to see any further extensions higher. You can see the consolidation range here above that at roughly around the 13,4500 mark, and then ultimately a break above that would see 13,5500, and then way back up to those highs that we saw just recently. As it stands now, looking at the breakout here from this extension, that was the first extension, this is the second extension lower. We've seen a bounce, and that bounce has taken us above the 38.2, and now we're finding support above it. Now ideally we need to see a break above 61.8 to see any further extensions higher to at least the 13,3800 mark. Otherwise we're just going to consolidate sideways until we see further extensions to the downside because of the momentum to the downside. So as it stands now, failed to break above the support area here. This price support here at 1332.50 or 133300 will not see the previous extension low at 133800 being our next potential target intraday. Got to see a break above this area here, a nice break, a nice bullish engulfing on here. Would see 133800 as our next potential target, the institution. Other than that, if it fails to break above this line here at 1332.50, we will see a consolidation with a long-term outlook for the remainder of the day to be bearish. Next up is sterling. Let's have a look at the daily, and like its European counterpart, we saw price opening higher last night on that favorable news. Italy might be helped by ECB, and notice however we have seen a lot of negativity on this, so CTC is still very much negative all around for this pair. So as it stands now, let's have a look and see where price is trading. Just going to do some support and resistance levels here. And the two major ones for the upside, that's still that ceiling level above the 15,600 ultimately is still in the way. Other than that, let's have a look at the extension lower here. Okay, the 100% mark is in play. From this down, we saw 100% failure on the daily all the way down, and we saw the breach of that. And what we're seeing now is price playing with that 100% extension level, so we're going to use it as our support or resistance intraday. So I'll just apply the nice there. Let's find out what that is on terms of price. 1548.8. So just let's put that in. 1548.8. 1548.8. Bear with me for a moment. So moving to the 4-hour chart, you can see that line now being projected there that I mentioned. We've got to see price trading above, pretty much near the 15,500 mark. You can see the 4-hour candle, the last one is pretty much pulling back. Look at our hourly. Here again, you can see the same thing happening. Pull back, But if this candle closes and it happens to be higher than this after the hourly candle has formed, then we could see potentially, let's see when this one closes. This one closes at 8 o'clock, so we've got another 28 minutes to go. If this closes higher, then we're going to find support above here, then we're going to see extension higher. If failure to do so, then obviously we're going to see close low. We'll definitely see price looking back on for the lows we saw at 154300 on Friday as our next target. And the lower go 15 minutes, etc., you can see the pullback happening. CTC is still blue, so got to see, in my eyes, got to see the price breaking, closing higher on our on our hourly and 30 minutes above that all-important resistance area at roughly the 1549, 15550 mark. Very, very important to see price closing higher. Until then, rather just bide your time, hang on tight, because we can see slight consolidation here. We don't want to be faked into any trades, so rather give back a bit to the market so it can actually dump people out, catch people short or long, and then big boys will come to the block and then we can trade that momentum. So be patient. I know we'll miss out on a bit if this is a genuine move. However, we're in it for the long term. We want to capture a lot of pips as possible, so this could be a fake cut. If this is to bounce high, you can see the CTC price was trading above the 50% mark for the first 50 moving average for the first time since the breakout that we saw in early 21st of this month. If this is genuinely a break up to the upside, you're going to find that people are going to be this price is going to move against people, trigger them in short, only for it to go upside. So be patient. CTC is giving us the first part of what we need. Is the blue arrow. We've got a blue candle in play, but it hasn't closed yet. So bide your time. Look at the 30 and hourly to see if price can actually find its way above that 1550-500 mark at least, and then we'll look for potential longs. Until then, be patient. Next up is sterling. Let's have a look at the Swiss franc against, sorry, not sterling, Swiss franc US dollar daily. Okay, price is really testing those highs now, as I mentioned, at the 930 mark. That was our all-time goal, still in this pair, or still in most pairs, and things are really looking snappy for this pair as it's been heading higher. You could see that the actual movement on Friday was a fantastic move after that consolidation range. Little breakout we saw early on Friday morning. Price closing above that prior resistance here, and it would have been a great entry to see further extensions higher. As we are now, we're seeing the close on Friday pretty much closing at the all-time high, and you could see on the Asian session last night we saw price pulling back, and now we are testing the upper side of that bandwidth. We like to see a close and trade higher than the high we saw on Friday to be really, really good for another extension or entry level. But as it stands now, this is really pushing higher, which is fantastic. And if you look at the move, break higher, and the slight pullback, 100% is here at 940. Easy for this pair if momentum continues to the upside. CTC is still in our favor. All the moving averages are spread out nice and wide, confirming the bullishness in this pair. We're going to be closing above this Friday's candle high to be showing still confirmation that we are trading higher after this prior resistance that we just breached. Looking at our smaller time frames, you can see those highs over here, for example. There we go on Friday at 9:33, and you can see price pretty much pulling back on the Asian session. There we go, testing 38.2, finding support, and then we've just bounced higher. So if this momentum continues, then ultimately we're going to be looking at those areas of 9:33 being back on for our first potential target intraday. So looking for a trade. You can see quite clearly here all the moving averages in favor. You can see that pullback and the extension higher. So that is ultimately going to be where price needs to be doing. Nice little bounce of 38.2 here on our hourly chart and a bounce higher. If things continue this way, then we could look at potentially this as being our start of our trade, the pullback, and then we look for 100% of that is in play now, but 161.8 is going to be our next target here at 92. The 932 mark, just below the highs that we saw just recently. So as it stands now, price is looking. The CTC, just remember, when you do need to see a blue candle, blue arrow, we have everything in our favor, but we have a red candle. So it's telling us that the sentiment isn't quite there at the moment. So if we just draw an RSI, let's have a look and see what the RSI is telling us. Just change that. Yeah, let's have a look and see what momentum is doing. Just move that over there. Yeah, we got a bounce. on the 50. When we saw that, so that's good. Still above the 50. That's great. Ideally, that's what we want to see, is price still trading above the 50% as we saw that pullback and we saw the bounce higher. Very, very important. As price is moving higher, we want to see the RSI moving with price. That is great at the moment. Now you can see it's trading above that prior high. That was this resistance high here previously on the Asian session. So if price can actually close higher, it'll dictate that it's actually trading higher than the previous high, which indicates that price is still moving in favor. RSI is in play with price action, which means that we should see further highs. If we see this hourly candle close and the RSI is still on par with the prior high, and price is slightly higher, close higher, that means that market sentiment is not really moving with favor, and we should see possibly consolidation long term here as we head into this area, and we could see potential pullbacks to occur for the remainder of the day. So just keep that in mind. It's good to plot a relative strength to see if price is moving, if this genuine move upside is genuine positiveness, or is it just a fake out that we're seeing first thing in the morning. Last pair of the day is US dollar Japanese yen. Let's have a look at the daily. Yeah, nice bounce higher on Friday. That momentum really gaining now as we broke through the 61.8 fib line on the past couple of days. And I really thought we were going to see price really falling lower, but it managed to hang on to that area. And then we saw through Wednesday, Thursday, and Friday, price really finding strength, and the US dollar picking up a lot of momentum against its yen counterpart and pushing higher. Price has pulled back on the Asian session to the 50% mark. And now we're seeing price trading at the upper end of that bandwidth on the candle, 77.50. If we can find support there, then sure enough, 78 will be bang on target for at the 38.2 is our next potential target, and ultimately way back up here at 23.6 if that 50% at 78 is being breached to the upside. So very, very important. Price is to carry this through. Let's look at 77.50 as our intraday support for this pair. Bounce higher would definitely clearly signal that we should see at least 7,800 being our next potential target in our intraday time frame. So moving into our hourly, for example, let's put that 7,800 mark in. There we go. 700 well above us there. You can see that consolidation range, a lot of support and resistance through that area there. And as I mentioned, 77.50 is going to be our support. 77.50 way down here. You can see quite clearly price support was new resistance, then we saw the breakout recently, and we're trading above that area. Moving averages all evenly spaced out. CTC well in our favor, and we're looking for further upside movements on this pair. So as it stands now, you can see price is consolidating. We saw a massive open low, and then from the low onwards it's been clawing its way back up again. Ultimately at 77.80 we need to see a breach of that to see, for those trading longer term, to be trading at least to 7,800, which is going to be our intraday target if price continues this momentum to the upside. So let's make sure that price is still trading above the 77.50 intraday. If we can maintain that and stay above 77.50, then ultimately we're still looking long for this pair as it consolidates to the side as we move higher. If it fails and it breaks lower than 77.50, expect price to fall back to roughly the 77.35 to start with, which will bring us back in line with the actual upside trend here. But as it stands now, 77.50, if we can stay above that, then ultimately long term we're going to still see that bounce higher, and we should be looking at 7,800 as our first potential target, and then on top of that up to 78.50, and then ultimately way up there to the 79.80 where we had the institution moving on our daily. That's it, guys. Hope you have a fantastic trading day today. Make sure that you follow the rules of the CTC. Make sure everything is in your favor before you actually pull the trigger. We do see a lot of movement just prior to the Sterling Open, and we do see a lot of fake outs before we see price really catching on and moving in direction. So just bide your time, wait for that move to occur at the 8 o'clock a.m. Start. Once we get that confirmation, then look to see which way it's trading. Is it in the same direction that we see the major trend? If so, yes, pull the trigger. If not, see how far that pullback is likely to occur intraday, because we are seeing some pullbacks now. There's been a lot of favorable news over the weekend that ECB might actually help out Italy with some funding. So that, if that gets on and really is potentially good news, if it is genuine news, then we could see price really taking a pullback, especially on the euro sterling pairs, cross pairs as well. So keep keep aware of it. Until then, trade serenely.